All right, everybody, welcome back. Tony Marlette Jr. at Brookside Financial. Welcome to the road to retirement. Joining me, as always, Tony Shore over at Gradient. How's it going, Tony?
Oh, it's going great, Tony. Thanks for having me on the show. It can get confusing. Too many Tonys. You can never have too many Tonys,
That's
right?
our tagline, I think. I don't
Yeah,
think
you
we've
can.
had too many shows where we haven't mentioned that.
Yeah, you can never have too many Tonys. But
Our listeners might disagree, though. Maybe they say there's
yeah,
too many Tonys on this show.
yeah. If we have guests and you and I, you're the host, I'm the co-host. We can't have a guest on named Tony as
No,
well.
that's too much.
In
That's
fact, a lot
overload.
of people don't know this. This is a little known trivia fact that Chris Anselmo's real name is Anthony as well, and he went by Tony, but he had to change. We made him change his name because that was too many Tonys.
Right. All joking aside, his middle name is Anthony.
Yeah,
Yeah,
I'm kidding. His
I
first
know.
name is Chris, but
I know.
but
Yeah.
his middle name is Anthony. So,
Right.
and our first names are Anthony. So, yeah, you can never have too many Anthonys, I guess. That
Yeah. Yeah, very true.
So we have it's an amazing time. I'm glad we're doing a show this week because this week's it's been crazy, right? I mean,
Right.
there's a lot going on when it comes to economic and financial news.
Absolutely.
And I'm glad I'm talking to you today to find out what's going on, get your take on all this.
Yeah, so I mean, the headline item, obviously, every time now it seems like there's an inflation reading. That's the headline item. Now, over the last 12 months, ending at the end of May, inflation like ticked down literally
Mhm.
one tenth of 1 point,
Sure.
3.4 down to 3.3. So it gives us an indication, although we've done this before. This seems like kind of a recurring pattern where we get
It
a
does.
tick down and then the next month we're like, 5 ticks up. So for right now, for what it's worth, 3.4 to 3.3 may not seem like all that much. And that's the headline number. That's the big number. There's a lot of sub numbers that go into that if you take out non-farms and food and shelter, different things like that. But the main number and the overall consensus did tick down slightly.
Yeah. And that led to it just happened to coincide right before an announcement from the Federal Reserve, right? Is it
Correct. Yeah.
Powell and the Fed?
Yeah. So that's the other thing. Really, it's the last couple of years, it's just been all about inflation and interest rates.
Right.
So I think the big thing on it was either yesterday or the day before. The big headline item was going to be, I don't think anybody expected a rate cut, which we did not get. That's not news, but projecting a rate cut for the rest of this year. Remember, in January or even November, December of 23, the consensus was, oh, 6, 7, 8 rate cuts this year. Like, no way. That is not going to come close to happening. I think even some people, myself included, and some folks over at Gradient, had thought maybe we were in for about 3, and there's no way that we're even getting 3.
Oh
So I
no.
think they
One at
hinted at.
most, right? I mean
Yeah.
I mean, wouldn't you say at this point, I mean, you can't nobody has a crystal ball, but every indicator, economic and otherwise, and what the Fed's been doing, um, the one I have been saying 0, but that's just my personal opinion. I'm
Mhm.
not a financial guru like yourself, but I just have this feeling that, I had the feeling of 0, although the Fed indicated they probably would cut it once before the end of the year, but they're gonna wait until after the election to do anything because they don't wanna appear political. That's what I've heard.
Yeah, and I hear you, and I think with things being as back and forth as they've been, with inflation going the right way 1 month, then back, 2 steps, 1 step forward, 2 step backwards type approach. I
Mhm.
can't see them raising rates, and especially I don't mind doing it in an election year, but I think it's got to be, you got to have clear, concrete proof and evidence that this needs to happen.
Right.
I just think people need to see through that it's not political. Unfortunately, that's not always the case, though.
Sure.
That it shouldn't be. It's not like the current administration, one way or the other, is raising or lowering rates. But I
No.
get why they do it that way.
Yeah, and I think the Fed has remained for the most part, nonpartisan and non-political. They try to put, they make an effort to at least seem non-political, so that's good. But when it comes to the economy and things, in people's mind, the average American's going to equate it with whoever's in office,
That's
right?
right.
So,
That's right.
so that always is interesting. It's the same with gas prices and the economy. The presidents come and go, and we see
Hmm.
trends that don't come and go. So it's
Right.
like, how
Yeah.
much does one party over the other being in really affect
All
things
right.
like gas prices or interest rates
Right.
or, the Fed? And, there's things that, you know, in the long term, if they make huge changes that could over time affect things, but within a 4-year period, probably not.
Right.
So,
Yeah, and
uh,
I'm with you. And we've talked before. I think we're both in agreement. Obviously, elections have consequences, but at the same
oh,
time,
sure.
it's
Yes.
not every little thing that goes on, for better or for worse, pertaining to, one administration.
And the financial markets.
Right.
Yeah.
And what this is doing
Overall.
too is, with no rate cuts, or I should say it's cause and effect. If inflation continues to go down, that's when we could see some rate cuts. But when people are still continuing to spend money, we can't be cutting rates. And so we've seen earnings still doing really well, although it is starting to slow down. Growth stocks have been the story over about the last 2 to 3 years now. But I think that there's when we talk about the individual stock sectors, we have growth and value.
Yeah.
Growth has been the story over the last couple of years, but I do think that you're going to start to see a play and an adjustment towards investing in value stocks once earnings slow down over a prolonged period of time, which with rising costs and potentially raising rates is the idea. But again, we need to see some data first.
Sure. Yeah, and it is interesting because the big news now is everything's so expensive. That's all you hear about is people complaining about how much inflation is impacting them. And sometimes that has to do with wages not going up at the same rate as inflation, as true inflation. And when I
Right.
say true inflation, when you talk about inflation numbers like, okay, the latest inflation number came out and it was 3.3, and then people, go to the grocery store and certain items have gone up 10, 15, 20%.
Right.
Healthcare costs, health
Oh yeah.
insurance, 20% increase in health insurance for some people. It's like,
Yeah.
well, that's not, you know, people are like, what about that?
Yeah.
So
That's not 3%. No.
no, no. So I get it. People are concerned, and I think, don't you think we're going to see a slowdown though in spending,
Yes.
and
And I
then
think
they'll lower interest rates?
that's what I think. So I do think we'll see a slowdown, and I think we're already starting to see it. The Fed has the dual mandate: maximum employment, minimum inflation. It's a tough balancing act, but obviously that's what their jobs are.
Yeah,
The markets have been really strong, up 11% year to date. Still,
yeah,
uh, we mentioned earnings continue to drive everything, and stocks are still very expensive as a result. So valuations are high. It doesn't mean get out of the market. It doesn't mean don't get into the market. I guess it really just means be a little more methodical with what you're trying to do. Bonds have been down this year, so it hasn't been, which shouldn't be a surprise if rates have not been cut. Uh, I think that was the expectation. Obviously, like we talked about before, I think bonds were supposed to have a better year, but again, a lot of that has to do with interest rates.
yeah. Yeah, and it is amazing how much interest rates affect so many things, the housing market, which is a big market, the auto market.
Yeah.
So for a lot of people, that's, I know I wouldn't buy or sell a house right now,
No, not
but
unless you had to. So
yeah,
that's the other thing, housing, and then the wages you talked about before, for at least over the last month, the reading for the previous 12 months was wage growth outpaced inflation. So that's a positive
That
too.
is good. That's good. That's
So
good news.
that's what we call real. Anytime there's the word real in front of something like real wage growth or real return, it stamps out inflation.
Yeah, that's good. That's good. Well, there is some light at the end of the tunnel, perhaps, in some of these things. There are good aspects to the news, and I have noticed oil prices must be cheaper because the prices at the pump are
Mhm.
starting to go down, at least where I'm at.
Yeah, it's interesting. I looked at the Gradient Energy portfolio this morning, right before we signed on. Yeah, I noticed the same thing. So um, energy prices are down, although they're not. I don't have the exact. I have some numbers here. Energy year to date up 8.2%, but down 3.5% in the last month. So
Right.
as part of the
It
larger
went up
market,
quite a
it hasn't
bit.
performed exactly.
Yeah, but now
Exactly.
it's starting to come down, or it has come down a little bit from that high, so that's good. But, well, it's good in one sense. I mean, obviously, if you're buying or selling oil,
Right,
you
not
like
so
it when
good.
it's high.
You like it when it's higher, but if you're
Yeah,
filling up your tank, you're right.
yeah.
You
Yeah,
want that low
exactly.
price.
But for investors out there, let's put this in terms that our listeners and viewers out there, uh, helpful terms for them. So, what do you see for your clients and for our listeners out there? What are some things they should be doing? I assume if they aren't already working with financial professionals like yourselves, who take a holistic view and view everything, taxes,
Mhm.
the markets, investments, all of these things you take into account, and then look at their personal situation. You really need somebody steering the ship like that. It's not really a DIY type of situation we're in, is it?
No, you're exactly right. So, I'm a big believer that growth assets and stable assets have a place in everybody's portfolio. It's up to you to work with your advisor to figure out not only what that allocation is, but what those solutions are going to be. We can still take advantage. We're still seeing some people taking advantage of prolonged higher interest rates on fixed solutions or solutions with a cap, and we're still looking at all the time, like we talked about before, the value story versus the growth story, dividend versus growth story in stocks, and mixing everything together. We were talking about shorts that we were recording before you and I went on today. One of the things I always mention in our shorts too, we do social security planning and social security maximizing, and you talked about taxes. It's not just on paper. Anybody can look at a social security statement and say, okay, this is my social security benefit. This is how I can maximize it. I think the big value that the advisor provides, that we provide, is taking into account your other assets, your other income streams, your sources of income, making that all work together with, say, social security.
Looking at everything and saying,
Absolutely.
okay, your plan should, let this grow. Will you pull from here and move that over there because you need that at this time? So you got to look at, your time horizons and when you need things and where it should be allocated and how to maximize and take things at the right time. For some people, they might need to take Social Security earlier. For some people, it's making gonna make more sense for them to let it roll up for them or their spouse. So,
Yeah, no
yeah,
doubt. No doubt. And we've seen a lot of that where, hey, your best option on paper for Social Security might be letting it, waiting till 70. Well, a lot of people would say maybe they don't want to work till 70. Not only that, but maybe they don't want to start pulling down on their investment accounts when the market's going down. It's kind of like a double dip, a double whammy. So we'll take a look at all that too to kind of show you the best bucket to pull from, how to do it most tax efficiently to make your assets last as long as
yeah,
possible.
yeah, that's huge. Well, I think that's really good, and it is good to get a market outlook and see where we've been and where we're going. I mean, the markets are up. You have the Fed announced that, hey, we're not gonna raise or lower rates and inflation ticked down. So then that day the markets go up quite a bit. The NASDAQ had an amazing day that day.
Right.
So, as of this recording, but things change. It goes up and down, but over time, it's gone up. If you look at the
Right.
last 100 years, it's really increased.
Yeah, we have those charts that we keep in our meeting rooms that we show people too. The amount of down years in market history versus the amount of up years, it's not even close. And the down
Right.
years are a lot of them have been fairly tame. So a lot of things. There's been elections before. There's been controversy, although elephant in the room with all this. I think people thought the market was going to react very negatively if we saw a conviction of a former president. I don't think anybody ever thought we would see anything like this in our lifetime. The market didn't react much, and if it did, I believe it was only one day. One way
Yeah,
or
it
the other,
really
I
didn't.
think it's
Yeah.
very bad news no matter what. But that just goes to show you too that a lot of this stuff is short term. You would think with all the I know there's a lot going on, obviously, with government, politics, and all this other stuff. You would think that businesses and the markets are still the trump card. No pun intended there. That was an Anselmoism. But
Playing the
you would
trump
think
card. Thanks, Chris.
you would think businesses, having faith in businesses and the consumer and earnings over the long term is going to be able to override any of this other stuff. And you certainly hope so. We've seen some things go on that none of us have ever seen in our lifetimes before, though.
Oh, sure. I mean, you have black swan events. That's what they
Right.
call them. COVID, right? President being convicted. We have these events, and they can affect the market short term, but long term politics. You shouldn't let your emotions. Don't let politics affect your investment decisions. Isn't that what you've said or Chris has
Oh,
said?
yeah.
Yeah,
Absolutely.
right. That doesn't make any sense, and that's
No.
another reason to work with somebody like yourself, Tony, because people have an emotional connection to their money and they react emotionally. And that's why you need a third party
Right.
like Brookside Tax and Financial, wealth management, an advisor like yourself to say, no, your situation is fine. The markets, you've got this time horizon and you'll be fine with that time horizon, no matter what happens this year with elections.
Right.
Presidents will come and go, and here's your plan and where you're at. And I think the thing is, no matter who's elected, these companies like Apple and Google and Nvidia and all these whatever the company you're talking about, Costco or whatever stocks you may have, we're not recommending particular stocks. I'm just throwing out examples. These companies, despite what the Fed's doing, despite what interest rates do, despite what president is in office, they find ways to make money. That's their job, is their bottom line. And so right now, earnings are good for companies. And
Yeah.
unless these companies all of a sudden have horrible earnings all at the same time, all in the same year, that's when you have a problem with the market. The markets are based on these companies and earnings. They're not based on politics. They're not
Right.
based on interest rates. They're based on companies' earnings. Now, can certain things affect those earnings? Millions of things affect those
Sure.
earnings, but the companies are in existence to make money, and they're most of them, the S&P 500, top 500 companies, pretty good at it for a long time.
Right.
So I'm not too
Yeah.
worried about it. You
No,
hear
I
of
agree.
you
Yep.
hear about the Red Lobsters and
Hmm.
the GameStops, the meme stocks out there. They call them meme stocks,
Yep.
like GameStop or AMC Theaters. Sure, I mean, if you're investing in crazy stuff like Bitcoin or AMC or GameStop, yeah, then you're taking on risk. But
Sure.
if you're in the S&P 500 and you've got a good advisor, um, your emotions shouldn't play a part, because none of the other things do, right?
Right. I've been in this business through four different presidential administrations, 2 Republicans, 2 Democrats. There's been so many people I've met with for each one that have said, I'm out until such and such is out of office.
Yeah, right.
It doesn't work. It
Yeah,
does not work.
right, right. And if
Even
you look
though,
at
like I said,
history,
we are
it
seeing
doesn't
some
matter. The
things.
market, it's about even, right? When the year down years, you've had just as many down years with one party as the other, and it's almost even.
Yeah, it is. So Republicans grow it more in the market. Markets perform a little bit better, but not by much. And then Democrats do a little better with GDP and not by much. So,
Right.
those two things kind of go off of each other too.
Mhm.
So,
Yep.
um, and then, yeah, I saw you brought up meme stocks. I saw Gradient's Jeremy Bryan, one of the portfolio managers on one of the business channels, maybe Fox Business, talking about meme stocks.
Yeah, Jeremy Bryan was on Fox Business and another one. I know he's on Bloomberg and
Bloomberg, I was gonna
but
say
he's a
too.
senior portfolio manager for
Right,
Gradient Investments. And he is, yeah, he's probably one of the sharpest minds they have at Gradient Investments. And he really knows his stuff. And that's why these channels ask him to come on and talk about these things. But yeah, he's been talking about meme stocks lately. That's why
right.
I heard that. It's funny you mentioned that. That's why I brought him up because, you don't want to get involved in that. I mean, unless you've got, you're sitting on $200 million in your accounts and you want to take $10,000 and play with it, or
Sure.
if you're sitting on a few million and you want to take $2,000 and test it
Yep.
out. I mean, some people can afford to play around, but
Yeah, it's a
you don't want to
speculative.
gamble with your nest egg and your financial security and your retirement income.
He should. I guess we're not going to see a Gradient meme stock portfolio anytime soon, right?
No, no, we're not a hedge fund shorting. Gradient Investments doesn't play that game like hedge funds and trying to short stocks. And
Yeah.
nope, nope.
Yeah.
They're in it to grow your money and not take huge risks.
Yeah.
But they do have a new digital portfolio
I did
that
see that.
it was up 129% last year.
I think that's one of those too, like you
Crazy.
said. They have concentration limits on that one. You literally can't put more than I don't know what the percentage is of somebody's overall
Right, because
net
it's
worth
higher
into that
risk.
because it's so high risk.
Yeah,
And
yeah.
I wouldn't, you got to tread very lightly with that because I don't mind doing it. It's just, we want to peel off whatever
Yeah, you're not
we
gonna
want to
do
peel
that
off
with
a
somebody's retirement
very
money. I
small
mean,
portion. Yeah,
yeah, you're not gonna play those games with retirement money. You can't. I mean, it's gotta be sensible. You gotta
sure.
have a balance, and that's what you guys have always said, right?
Right.
Yeah.
Yep.
Yep. Well, Tony, great show, great market update, talking about what the Fed's doing. And I know we'll have follow-ups and next week we'll see where we're at, from week to week. We talk about what's going on.
I'm interested to see the rest of the year what everything brings with inflation, with the
Yeah.
market, and with interest rates.
Yeah. Yeah. And so far, overall, for people who are concerned about their retirement funds that are in the market, their 401ks, their IRAs, so far, it's not been a bad year.
No, not at all.
Been pretty good.
Actually, it's probably up to this point been better than expected. Time will
Yes.
tell over the next 6 months, 5, 6 months, if that's going to remain to be the story.
Sure. I mean, you have a couple of hiccups in there, maybe. You've got good and bad. You've got a presidential election, which could be good or bad. You've got
Sure.
the holiday shopping season, which always it affects corporate earnings. So interesting. Yeah, I agree. I'm interested too. And that's why I keep in touch with you, Tony, so I can hear about what's
That's
going
the
on
only
out there.
reason, but that's fine. That's okay. We don't take
No,
that too
no,
personally.
no. The two main things we've talked about this before, the two main things that everyone knows about Tony Marlette Jr., good looks and charm. I mean, you've got that going for you.
Oh,
So
all right.
yeah,
I'll
yeah.
have to
You
start
seem
using this. I'll have to
surprised by
start
that.
realizing that. Yeah, I've never heard that before.
Two things, good looks and charm. Just like me, people say, Tony, how do you do it? My two. I say two things, diet and exercise. That's
There you
how I do
go.
this.
Yep. It's like it was Chris say, more than just a pretty face.
Yeah, I hope he's got more than just a pretty face.
All right, Mr. Shore, thank
All
you.
right. Thank you, Tony. Great show today. And hey, that does it for today's episode of Road to Retirement.
All right, thanks everybody. You can I'll throw up our there you go website brooksidetax.com, Facebook at Brookside Financial, YouTube as well. 440-886-3550. Look forward to hearing from everybody. Thank you.